My mission is to make wallets work together, because a future where wallets don't work together means a monopoly, where only one wallet takes the whole market, because someone is always afraid of sharing a bit of the market share, which is kind of counterintuitive that you have to share market share. But the reason you share market share is that you grow the market as a whole.
Pedro Gomes is the founder of WalletConnect, an open source protocol that securely connects users to decentralized apps.
Trusted by over 45 million users and powering 275 million plus connections.
90% of the time, your legal identity is tightly coupled to some financial benefit, whether it's taxes, salary, or investment. So if your blockchain address was directly related to your salary, investment, and taxes, what is more important to you, the national passport or your blockchain address?
How do you approach investing?
Any investing that I've done has mostly been because I know the founders. I believe in their dedication, strength, and willingness to make the project succeed. Too many times people get too caught up with the idea. Even the worst idea could be successful if you have a very strong founder behind it.
The other day you mentioned Ukraine war, forcing you to think about decentralization.
Yeah, this one was a tough one. It definitely caused us to really think that this is needed much sooner than we think. But WalletConnect had this very bad episode where we actually ended up sanctioning Ukraine and Russia. We had to completely drop the connections and everything. And this was when I realized this is why decentralization exists.
What's the future of WalletConnect? 69% of the people who watch this podcast have not subscribed. If you enjoy this show, if it provides value to you in one way, shape, or form, can I please ask you a little favor? Can you click that subscribe button, give this video a like, and leave a comment down below? It helps this show more than you can imagine. My goal is to bring the absolute biggest and brightest people on this channel, and the best way to get there is to have all of us rally together and build the When Shift Happens family. Thank you. This conversation is supported by Jupiter, the most used decentralized trading platform on Solana and the largest DAO in the world. Bitwise Asset Management, the crypto specialist asset manager with more than $10 billion in client assets and more than 30 crypto solutions across ETFs, index funds, alpha strategies, staking, and more. 3. A scalable layer 1 blockchain that's fast, secure, and affordable, built by previous Facebook developers, and that delivers the benefits of Web3 with the ease of Web 2. And Mental, an Ethereum layer 2 that built two products I particularly like. FBTC, which enables you to borrow and lend Bitcoin in DeFi, and METH or METH, one of the largest ETH liquid staking protocols in crypto. So When Shift Happens is the luxury brand of crypto podcasting. Actually, I never really thought about it, but it's actually always what I wanted. I was like, how do I do something that everybody agrees on, that it's the most credible? And for that, you need to only associate yourself with big founders and big brands. And even at some point, if you want to monetize, the only people who can sponsor are the big brands. So you need to, it's kind of like this kind of flywheel, but that is kind of hard to build. And then I never thought about having other kind of smaller people on, to be honest. I always thought this is going to hurt the brand, etc. But there's probably a way to do it.
In the long term, maybe it hurts, not in the short term. In the short term, it actually adds incredible value, right? Because you establish your brands, and then in the long term, then you eventually will plateau. So you need to really figure out how you're going to scale it. And creating a new segment is the best way, because then you don't dilute the existing brand and you can still expand and grow.
When you say in the long term, you can hurt your brand, do you have examples? Real examples? For example, of a luxury brand that would have done it wrong?
Right. So luxury brand. If you are selling, whether it's luxury cars or luxury fashion, eventually you will run out of clients. Sure, you can launch a new car, but then it's always going to be the same thing, right? And then your market will hit a plateau. And if you then create a new car, which is an affordable version of your luxury car, now all the people that dream of having the luxury car can buy this new segment, because one day they will eventually get the luxury car, or at least that's the dream that you're selling. You're not just selling the car, you're selling the dream of the high brand, And the podcast is the same. This applies almost to everything.
Who are you?
I like to call myself an engineer, and that's what I always identified myself, but I started realizing that my biggest value is actually understanding beyond just engineering. Too many times I meet these developers and they are too caught up with the actual engineering to understand that what they're building has a much bigger impact. And I think what WalletConnect has done, and that I always focus on, is just connecting really people. And this connection goes beyond technology. It also goes through designers, marketing people, and everything. We're all trying to solve the same problem, but we can't talk to each other. So yes, I'm an engineer that is not so engineer.
What's the moment that you went from engineer to an engineer that is not so engineer?
It definitely happened gradual, but it actually happened. I was working back in 2017 on a wallet for Ethereum. I was just another engineer on this team, and WalletConnect came out as a solution. But then this solution got like so popular, like on Twitter. It kind of just blew up, right? It went from like this demo, 27th of March, remember the day perfectly, and like 1 month later, everyone was talking about it. And then the Ethereum Foundation was like, we're gonna like provide you a grant. And that got me out of the team, went full-time solo. And then I realized that now I have to be the BD, I have to be the marketing, I have to be the legal, the operation, I have to be everyone. And now engineering was only like 20% of what I did. I had to learn every other task that I had to do. And I realized that connecting with people, like I don't even like calling it BD because I think it's too reductive of what I do. It's really to act as a mediator between all of these companies to work together. That was the biggest shift. So
how much do you like your role versus being an engineer, right? Very focused. Because you have to be people connector, right?
I miss the engineering part. I have to be honest. I miss it a lot. But there's this really interesting middle ground, which I currently fit in, which is like these standards, right? Because standards are highly technical, but standards only work if multiple participants are involved. And that's where I really found my niche, which is I have to understand incredibly technical topics, but they only work if I get competitors, if I get people who don't talk to each other at all to work together and build these standards together. So it is like this intersection between like business development and engineering, but neither can do it perfectly. You have to be right in the middle. You have to be a mediocre engineer and a mediocre BD, but like the right standards guy.
What is your mission?
It's honestly, it's unifying everything together. Like, you go to these places like conferences, you take video calls and you hear everyone like basically screaming out the same problems. And you see the solutions very easily, which is like, you guys just need to work together. Like sometimes I try to actually do too much. For example, now I'm kind of trying to get Ethereum layer 2s to work together. And that's a little bit outside of scope. But at least my mission is to make wallets work together, because the future where wallets don't work together means a monopoly, where only one wallet takes the whole market. And then you have this distributed, decentralized, permissionless blockchain, which is controlled by a single wallet. And we just basically reinvented banks. We reinvented Facebook. And we now have one company owning the blockchain.
How do we avoid that?
Well, first of all, I think people need to read on history, right? This has happened before. Like it happened with email. Email is probably one of the most distributed, decentralized technologies that is solely owned by Google. And people don't realize that, right? Like email only works because Google just took over. And that's obviously not a great situation for decentralized technology. And social media had so many moments in time that it could have been decentralized, but then Facebook took over. And that's why it works. We've done this multiple times. And the reason we always end up in this centralized solution is because someone is always afraid of sharing. like sharing a piece of technology, sharing a bit of the market share, which is hard, right? It's kind of counterintuitive that you have to share market share. But the reason you share market share is that you grow the market as a whole. And I hope that we build better networks that incentivize growing the markets together rather than killing markets to build monopolies.
It's completely counterintuitive to the founder mindset.
Yeah.
If you look at wallets now, MetaMask probably still used a lot, but kind of old school, right? And you have Phantom Wallet kind of taking over everything because it's simple to use. And because at some point I feel people just, it's all about trust, right? And the most trusted or the most used becomes the most trusted, which become the most used, which become the most trusted. And then the other ones could come and be like more secure, whatever argument they have, right?
Yes.
I don't see how we end up in a different place than email in crypto wallets, for example.
You just have to let go of the technology part, right? Like if you let go of the technological moats and you focus on the other moats, which are not, you really can't scale trust. Trust is a very difficult to scale, and that's why blockchains were invented. Like blockchains were invented to scale trust beyond borders, beyond nations, beyond everything. Like I like really the term, like 1KX, one of the first investors in WalletConnect, they actually call blockchains trust machines. And I think that's an amazing way of putting it because it scaled something that was unscalable before. But even then, you cannot scale customer relations. And wallets are customer relationship for blockchains. But that does not mean that they have to own the technology. Does not mean that they have to like now close source, close APIs, and essentially recreate the same problems that we have in Web 2 with siloed data, siloed infrastructure. You can still own the customer relationship, and it's very hard to win over a new customer, right? That's already a very strong moat anyway.
How do you change an entrepreneur mindset from going from closed to open? We have the example with AI, right? AI, US, open AI. Then you have like the kind of Chinese version, completely open source. You have to have someone who come and is very strong and open sources everything that shows the way and actually kind of forces the market to do that. Otherwise, no participant will have the incentive to do it.
I think it's not that hard to sell on this vision in blockchain because things change every month. So like, even if you closed source, like your moats today might be old school like 3 months later, right? So it really becomes speed. It's all about speed. And closed sourcing or open sourcing is not going to change the fact that you have to just innovate incredibly fast to even stay in the game. The only thing that will remain is your relationship with your customer. And that's what you should put all your resources into. That relationship has to be not just the marketing team, not just the BD team. It has to be the leadership team, the engineering team, like all of these individuals that work for startups, big corporations that believe that they can just like clock in and clock out and do their job. They have to understand that they are actually in a relationship with their customer. And that's something that's slowly starting to be understood in crypto. And we're starting to see these founder-led marketing, team-led marketing. And they're realizing that people stick to their products because they like the people in those teams.
Dear When Shift Happens family, the following message is probably the single most important thing you should take away from today's podcast. If you're serious about your crypto investing journey, please take some time to learn how to self-custody your assets to make sure that nobody can take your coins away, ever. If you don't learn how to be your own bank, it is very likely that one day you will lose all your hard-earned crypto. The safest way to hold your crypto is in a cold storage that we also call hardware wallets. Hardware wallets are not complicated and they give you peace of mind. I personally use a hardware wallet called Trezor. It is open source, very easy to use, and the first hardware wallet created ever. As we like to say it in crypto, not your keys, not your coin. You can order your Trezor wallet with a 10% discount by following the link in the description down below and by using the promo code WSH10. And now, back to the episode.
100%. We'll talk about personal brands a bit later on. You talked about unifying everything, right?
Mm-hmm.
You lived in multiple countries, which led you to question a concept that most people do not question: nation-state identity.
Yeah.
What is, tell us about your life, especially around that part, right? Moving around and seeing the problems, and explain the concept of nation-based identity and why it doesn't make sense.
I think that most people, and when I say most people, I see literally not beyond our cryptosphere, they tend to be born in one place, get raised, go to school, get a job, and then they don't get exposed a lot. And a lot of the times people get exposed to other countries through tourism, but tourism is kind of like you getting a sample in a supermarket, but you actually didn't like have the whole product. So you actually don't know if you really like it. Like very few people actually have spent beyond the 7 to 14 days on a single place to really feel another country. And the more time you spend abroad, the more you realize that it's all the same. So all the special quirks and everything that you put yourself as like, this is me, were just like environmental influences on you, right? They were just things that you heard every day. They were just things that you saw every day. And then it wasn't really you. Like the true you is the one that actually will persist no matter where you live. So this national identity thing is kind of like just you sticking to your environment. And it doesn't really make sense for us to hold on so dearly, because what's the actual social benefit of it? What's the actual economical benefit of it? Like, isn't it better that there is more economic growth? And isn't that economic growth going to come from having more people participating in it? One of the worst things about Europe is the language barriers. We have united Europe, but there's still language barriers. Even if you removed the actual borders, which were done through the Schengen Treaty, people still don't talk to each other as much because of the language barriers. And that actually influences commerce, that actually influences business relationships. And if we just shared one language, our economy would 10x right away. And I think people don't want to share a language because they're still holding on to their national identities.
Some people would argue that this is actually the beauty of the world history, right? And not everything is about business.
Yes.
Why does that make, for someone who's moved a lot? For me, for example, I'll give an example. Now I live in Singapore. I do some charity trips to Cambodia sometimes where we go help kids there. And I'm always thinking, and I thought that all my life, actually. All my life, at least the last 10, 15 years. Why is being born somewhere, you can be born like an hour plane away from another place and it's going to kind of define everything about your life, right?
Yeah.
Just because of where you're born and just because of these borders that were kind of invented by humans, which don't make any sense.
Yeah.
Because if you actually walk on Earth, there's no border, right?
Yeah.
It's just everything that was put by people. Why is that even the case? And why is it so hard for people to move? What's the benefit there? Like, what's the reason why we have these nations and these nation-based identities?
The reason borders exist is because all of these countries had hit like glorious days at different stages in life. If we all just started our countries at the same time, we would have had a very different distribution of power. But like most of these civilizations actually, started at different stages, and the glorious periods of one might have been the dark ages of another one. And the borders were ways of containing those problems, like for wealth to stay within the glorious days of one country and not just like dilute into the dark ages of another country, right? But right now, like it's 2025, And the difference between the glorious days of one country or another are getting smaller and smaller. And with the internet, what we've seen is that we actually are very similar. Like we can have like people contributing in so many different ways from so many different countries. And then these borders are starting to like matter less and less. And now with blockchain, we actually broke another barrier. Before we broke the information barrier where people can just talk to each other across borders. Now people can exchange value. At this point, the borders are starting to become really meaningless, and we're starting to see the economical benefits of us having very different backgrounds, different cultures, even different languages, but sharing economies. And I think that too many times when I talk about this, like breaking borders, people focus too much on like, oh, you want to kill our cuisine and our like music and our culture. I'm like, well, those things actually don't influence economy. I would like a global economy. It does not mean you cannot have local culture.
When we talked the other day, you told me blockchain helps rethink identity beyond borders, just as it challenged financial systems. Can you explain with more concrete examples? Because you said, oh, like blockchain enables a more global world, but like, can you give some concrete examples of people who are less familiar with blockchains, or have some concrete example of, oh man, this is a big change?
I guess we just have to think from first principles is like, why do you even care about your like passport or your ID? 90% of time, like people care about it because either they need to get a job, or they want to make some financial investment, or they want to pay taxes in such a country. So when you think about it, like 90% of the time, your legal identity is tightly coupled to some financial benefit, like whether it's taxes, salary, or investment. So if we globalize finance as a whole, then what is more important to you, the national passport or your blockchain address? If your blockchain address was directly related to both your salary, investment, and taxes, then that truly would be more important than your passport.
We need an internet level identity to one day get truly global identity. What does that mean?
Currently, the only forms of identity that we have are owned by companies. Like you contact me either through email or Telegram or a phone number, and all of these forms of digital identity are owned by companies. They're not native to the internet. Blockchain is the first form of identity that is truly decentralized. Like you don't point to a single company and say they can shut down my ID. With Telegram, Facebook, Twitter, Google, like even phone numbers, there is an actual corporation that can make a decision to shut down your ID. And it doesn't mean like, I think too many times people think, oh, but Google, why would they shut down my ID? Like Google doesn't care. Like Google doesn't want to shut you down. But in external forces can make them shut down, right?
For example?
Like countries sanctioning a certain country, or even military forces. Like there's multiple ways through where they can be coerced to shut down your ID. So if your ID, which could be tightly coupled to your income, investment, and taxes, or even like your residence, was completely detached from any organization, then it would actually be yours. It would actually be your ID, and you could take it anywhere you want.
And your way to not solve this entire problem, but at least do your part in helping people get this kind of digital identity that goes beyond border. Your way is called WalletConnect. You're the founder of WalletConnect. What is WalletConnect if you had to explain it to your mom?
So WalletConnect, I really like the name because it really explains in a single word. It connects wallets, but then it doesn't say what it connects to. And that's intentional because we don't want wallets to purely connect to on-chain applications like it does today. We want wallets to connect to everything. We have actually had people in our community build several experiments where they actually used WalletConnect to connect to an ATM to literally withdraw cash. We had like someone do a gallery exhibition where you could actually connect your wallets to an actual digital art on a digital frame. We had people actually connect to cars through their like interfaces. So you can really connect anywhere with WalletConnect. And it's trying to break the barriers of both wallet monopolies, where we don't want one wallet to own the infrastructure, and also the barriers of applications, where one application would essentially control or dictate what wallets are good and what wallets are bad, you know? Living in this like permissionless nature for wallets will then have a direct impact on your identity, because wallets control your identity on the blockchain. And if even the blockchain was truly decentralized, the wallet could control your identity. So if the wallet can control your identity, the blockchain can control your identity, and not WalletConnect can control your identity, then we would actually create a better environment for you to trust your identity.
You previously worked for Neobank in London before all this crypto journey started, right? And neobanks are supposed to solve the traditional banking issues, but they don't really. How did working for a neobank lead you to discovering blockchains and more particularly Ethereum?
Yeah, so I got this job back in 2016 for the Neobank, and I was really excited because prior to that, I was very involved into photography and e-commerce, and I really got excited of this idea of like online payments. And one of the most important parts of the online payment was like the Visa card and actually having a bank. But like even if Visa built like the best infrastructure, the bank would essentially influence how that user experience would look like. And around that time, there was a derivative by the European Union, which is called PSD2, that made neobanks possible. It just made like the banking more open, and it allowed for more people to essentially build banking experience. So I was super excited to be part of like this new generation of banks. But it was still built on like fundamentally flawed like infrastructure, where we actually weren't a bank per se, because banking licenses were still incredibly hard. So you had to operate under the license of a big bank. So what we actually were building was a bank in a bank. And that meant that we had to listen to the big bank, what they wanted. We had to listen to what the regulators wanted. And for me, the most disappointing time was like spending like 6 months working on this like new feature that was, what if you and your friends could share a savings account where you all deposit into the savings account to do a trip to Iceland, and everyone contributes equally. And after 6 months, you have enough money and you book the trip to Iceland, and now you spend the funds from that savings account for that trip. It's almost like an ephemeral savings account that you contribute with friends to build a trip or any goal. It doesn't have to be a trip. And that feature ended up like completely changed and ended up nowhere near where we originally designed, because the big bank didn't want this and the regulator didn't want this. And then they just kept cutting down features until we ended up into basically a savings account. And it just ended up looking like a personal savings account. And that's when I realized that like, yes, they did create an environment for innovation where technically new banks could exist, but they just ended up being interfaces for the big banks, and the big banks were the ones who benefited because we were onboarding customers for them. We were almost like a sub bank, and I just didn't feel like that was going to be the future of finance. And later on ended up discovering about Ethereum and realized that literally anyone could build a wallet, and a wallet could do all the things that we always dreamed of doing in the neobank. And yeah, ended up in this crypto journey after so many years.
Like every great founder, you're before anything else a problem solver. So you discover this Ethereum thing, right? Say, oh, it's awesome. Kind of these new rails that this neobank or any neobank actually don't have. They're building on this traditional system. So even if they're trying to make things better, which actually, to be very honest, they made things way, way better, right? If you look at Monzo, Revolut, all these guys, right? They actually got so many customers because it was just so much simpler, right? The fintech apps. But the problem is the background, the back end is still the old one. So you discover this Ethereum kind of new infrastructure and you think it's awesome. But there's a lot of problems.
Yeah.
What was one of the big problems that you encountered with Ethereum that led you to build WalletConnect?
I mean, if you go back to 2017 and you're trying to build a wallet, you didn't have WalletConnect. So WalletConnect didn't exist. And that meant that you had to go to every app back then and convince them to actually use your wallet. And it kind of didn't feel right? Because you're building a wallet, your relationship was with the customer, like with the user. Like you're trying to onboard more users to the blockchain, not onboard apps to your wallet. Like it's a B2C relationship, but it sometimes felt like more like a B2B relationship. And I didn't really understand why until I actually started like just really studying how wallets were built and realized that all wallets worked exactly the same with a few caveats over how they actually communicated to apps. So because they didn't actually talk to apps the same way, then the apps had to make a choice of which ones to talk to. And this conversation we're talking about is literally the names. Like when you connect a wallet to an app, just imagine if someone said the word accounts and addresses would be enough to break compatibility between two wallets. And this for me was just crazy. Like there was no reason one wallet would hold a monopoly just because the way they spell the interface between an app and a wallet. And standardizing that and unifying that into a single interface meant that app developers specifically do not have to make a decision on which wallets to serve to their customers. It also means that wallets will not hold these monopolies just because of a naming convention. And it also meant that, you know, we can actually have a more competitive market, because I expected a blockchain to be more competitive than fintech, but then realized very quickly that the monopoly forces were way stronger in Ethereum in 2017 than even it was for banks. So WalletConnect was trying to solve that.
So WalletConnect is used to connect different wallets, right? But you're saying it's not a financial product.
It's not.
You're saying it's a solution for digital identity.
Yeah, I would say that is the actual goal, right? Even though financial has been mostly portrayed for WalletConnect.
Let's start with the basics. What is a digital identity? Because everyone uses this term since, I would say, like a couple of years in crypto. Digital identity, this is so important. Like, what is a digital identity?
I mean, I think we have to even say what is identity, right? Like if you actually go to a club or to a government or to a bank, the first thing they ask you is, can you provide an identity with a photo? And that identity with a photo usually has a name and your face. That is like the two primary factors for identity. And if you think about digital identity, it's quite similar. It's a username and a profile pic. The only difference is that like digital identity doesn't force you to use your actual face. You could have a penguin if you want as your face, and you could have a username that could be dgen420, you know, and that's your identity. Like it really doesn't matter, like, right? And
give us your anonymous username.
Maybe I should
buy account dgen420.
dgen420 with a penguin, right? That would be my next identity. But what's the difference between that and your national identity? The only difference is like one is more physical than the other one. But you could hold like as much value or even as much influence through your pengu as you could through your like physical meat space face.
I just have to ask because you talk about the penguin. I mean, it's there obviously. Are you a penguin believer? Are you interested at all into these things, or are you just locked in, focused on the?
I honestly, I would consider myself the worst trader ever. I'm very much focused on WalletConnect all the time. I only hold pretty much what I call blue chip like assets, like Bitcoin, Ethereum, Solana, like those who have actually survived and been battle tested through winters, as I like to say. Any other form of trading that I've done was purely entertainment, and it did not go well. Like, as people
Never does.
say, never invest more than you're willing to lose. And that's exactly how I would consider like all NFTs, meme coins, or other assets that I have put money into.
How do you approach investing in this space?
I
You
mean,
told me last time. You told me, do you bet on the jockey or the horse? Because you still do some investing, right?
very little, but yes, I don't think I have enough mind space to even do investing. So any investing that I've done beyond like blue chips like Bitcoin, Ethereum, and Solana has mostly been because I know the founders and I've known them and I believe in their dedication and their strength and willingness to make the project succeed. So too many times people get too caught up with the white papers and the ideas. And that's the analogy of the jockey and the horse. I don't believe the horse makes a project. I believe it's the jockey, like the people driving the project. Even the worst idea could be successful if you have a very strong founder behind it.
You said I don't have much time to invest, right? How do you even have time to invest at all? And put that in perspective, I wanted to say like very bullish for WalletConnect, because that's what every real founder in this space should be saying, right? I don't have time to do all this investing thing and all this trading of follow all this drama. I'm just locked in building this product, right? Since for you, it's since 7 years. That's bullish. I mean, you were telling me if a founder has a VC, this is a mega red flag.
Yeah, I mean, I know many founders who have VCs, and I like them a lot, but either they have the best time management skills or they're diluting their energy. It's just unfortunate that's true. Like, because the best VCs that I know do not have time to build projects, and the best founders I know do not have time to build VCs. Like, both are incredibly hard to succeed. So if you're doing both, all I can think of is that you either have tremendous time management skills or you're not doing both as best as you could. And this is not a stab at like other founders who do have VCs. I just think that all of the resources and time that you could have gained by not having a VC.
Especially if you have investors, which most people in this space or product have investor, right? It's just like the respect. If you respect them, you will rather focus on your company and building your product than starting to put another hat on, which is the VC hat. Absolutely. I mean, I'm far from building any big product in this space. I'm just a podcaster, right? But even that, I don't have any time to, barely I have any time to invest. And everybody coming like, hey, do you want to invest in this, in that? I mean, probably most of it is shit, but like for me, I don't even have time to look at what's shit, what's not. I have no idea, so I just don't look at anything because I don't have bandwidth. Like maybe it's because I'm dumb and I don't know how to manage my time. Maybe I'm too chaotic. I don't know, right? But I don't know how other people do it for sure. Like I really don't know.
And honestly, a podcast is a product in itself. So you are a founder as well.
Yeah. Subject for another conversation. I just always feel like, because I'm talking to these big people in the space, I'm like, sometimes I'm like, what the fuck am I doing, man? These guys are building like these mega multi-hundred millions, billion companies, and I'm just there asking them questions with a bunch of cameras and some light. Like it's so simple, right? But yeah, I mean, even at that scale, mine, which is not that big, right? Like with just a team of 6 people, like I don't have any freaking time to spend like researching and being in the trenches and do all this shit that most people lose their money on anyway.
Yeah.
So probably it's better to not have the time. You said before, I know a bunch of amazing founders. Like the best founders I know don't have a VC. Who are some of the best founders that you know, that you like, and why?
The best founders I know, usually you end up finding them in the least expected places, right? Because they are either very much involved in the product itself, or they're very much involved with like their own teams. There's like really two types of founders. Like there is the one who is more extroverted and they actually are building their products very externally, and they are essentially involved in expanding their network. They're involved in like listening to their customers directly. And those are just as impressive as those founders who are a little bit more inward facing, who are, instead of building out from outwards, they're building out their teams. They're empowering their team members. They're educating their team members. They're growing. They're essentially creating careers, right? Which is a different type of founder, right? Because I'm more of the outward facing founder, like myself. Like I probably not succeeded as much as building out an environment where people grow in their careers. I was very lucky to have a lot of talented people surrounding me because they were drawn by the mission of WalletConnect. But that's a very different founder than some founders that I've met, that they really have scaled teams and really build like these very cool environments where people are growing. Like they're going from juniors to seniors. They're going from individual contributors to leaders. And it's almost like you're building a mini accelerator inside your company. Like to turn the average contributor into a founder almost level, right? Where your team members are as dedicated as the founder. That's something that's very hard to achieve. It's a very different type of founder skill set.
Who do you think has done an amazing job at that? Helping contributors becoming almost founders?
I think it's very hard to pinpoint one in particular, but usually you see like these companies have a lot of spin-outs, right? Actually, Gnosis is a good example of this. So Gnosis is probably not as well known as a name today as it was in 2017, but you will know about Safe, you will know about CowSwap, and you will know about Gnosis Pay. So Gnosis has not only succeeded as a project, but they also succeeded as building out incredible people that went to be founders and build great projects, which is a very different type of like the founder like myself who goes into podcasts and really grows a brand. They have grown people, and these people ended up becoming very great founders in this industry. And, you know, just like Consensus has created like multiple successful projects on Ethereum, Gnosis has also created multiple successful projects. So they are a very impressive project that I think it's very under the radar because few remember that CowSwap and Safe actually came out of Gnosis, and they were projects inside Gnosis.
You got into crypto because of Ethereum, right? So you must have, we're talking about investing here still, you must have, or at least you must have had a bias towards ETH as an asset for a long time. I think Alex from Nansen has a similar experience. I think he's also on the board of WalletConnect, right? So you guys know each other really well.
Well, to correct, WalletConnect, the company, rebranded to Reown. So technically, Alex is on the board of Reown.
Okay. As a real builder in the space, what are your thoughts on Ethereum and on the rise of a competitor like Solana?
Yeah. Fortunately, WalletConnect, this all goes back to my time when I was living in Berlin, and I spent a lot of time with like Cosmos and Polkadot people, and I started realizing we need to build WalletConnect for Cosmos and Polkadot. And the same way I realized that all wallets work the same, blockchains also work kind of similar. So we ended up upgrading WalletConnect to work with literally every blockchain out there. This means that now WalletConnect that exists today works not just with Cosmos, Polkadot, and Ethereum, it also works with Solana and Bitcoin and so on and so forth. But I cannot deny that like many of my contributions have been focused on Ethereum. Not just because I was financially invested in it, but also because I have made, my debut on Ethereum. That's how I started into crypto. So I am biased. But I also, because I like Ethereum so much, it's fair to say that I'm in a position to criticize it as well. And I think that Ethereum got a little too complacent. And we're recording in 2025. This might change, but today Ethereum has taken its position for granted. And Solana saw that and gained that opportunity. Too many times, Ethereum had the opportunity to outshine Solana, but they just chose not to because it just felt like it had won. And it's impossible for any layer one to have won in 2025.
When did you start taking Solana more seriously? Especially, you said before, I'm an investor in blue chips, Bitcoin, ETH, Sol, right?
Yeah.
So more like the investor hat. When did you start to take Solana more seriously and realize, my bias towards Ethereum, because that's what I started with, right?
Yeah.
So probably I hold more ETH than anything else. Or there is something happening here that I notice on the builder side, and therefore also need to make some kind of adjustment as an investor.
Yeah, so everyone knows what happened to FTX. The impact that had in the Solana ecosystem it was literally gonna kill any other ecosystem. And for many, they felt like Solana was not gonna survive this because it was just too strong of a hit. And I was very surprised to see on the year after how vivid and dynamic the ecosystem was. But it's actually only in 2023 that I saw this is not just an ecosystem that survives FTX. This is an ecosystem that is thriving at an incredible rate that is not only gaining new users and developers, but it's actually growing a whole pie of developers and users beyond what was originally considered crypto native. And this is something unique, right? Because most of the time, what we saw is Bitcoin started the movement, and then Ethereum built on the shoulders of Bitcoin, but it still essentially had massive overlap with Bitcoin community. And then that expanded, and then other projects ever since were trying to build on top of the Ethereum shoulders. Solana was not only surviving FTX, but almost growing out of its own circle. And that created something really big, because if you are able to capture that many users and developers without relying on the existing growth of previous blockchains, you have the resilience to really win. And then obviously seeing like other blockchains taking their positions for granted and ignoring Solana's growth because obviously Solana was more centralized and it did not follow the ethos of decentralization as strongly as others, but it was capturing network effects that were not seen before. And that's something that it cannot be ignored. And I definitely noticed in 2023 and in 2024, I realized this is something that we really need to take more seriously.
How?
Well, building tooling.
When you say we, it means you still identify as an Ethereum.
I think that needs to be everyone. Like it needs to be investors, users, developers. We all just need to kind of reevaluate our philosophy, our thesis, and start putting resources into this. And I think that I speak for people who are originally very Ethereum aligned, but I also speak for new investors that, this is a new space to look out for.
You mentioned before about different founders some are more like introvert, some are more extrovert, right? And we'll be talking about digital identities over physical ones, which shows like a big shift in the world in general towards the online world. And in this new online world, there's a concept that took over almost everything, right? Personal brands. COVID probably played a big role in accelerating this, but if you look at it, there was some guys like Gary Vee for like almost 20 years already talking about the role, the upcoming role and importance of personal brands, especially online. What's the big shift that you've seen in the crypto world regarding the personal brands in the last 7 years?
I actually don't think that this is a crypto native movement. This idea that personal brand actually is winning over corporate brands is happening way, way more global scale than crypto. Like crypto is growing to become a very massive industry, but it's still niche. And eventually it will become something that hits 1 billion users, but it's not there yet. But this personal brand versus corporate brand is something that it's been happening also in Web 2. I mean, anyone who has not recognized the big change in Jeff Bezos' personal brand, Elon Musk, Mark Zuckerberg, they've all heavily invested in their personal brands because they realized the direct impact this had into their own corporate brands. And it's not exclusive to them. Like even in Shopify, Tobias, like he also invests a lot in his personal brand and is building out that. And I think this is something that's just happening worldwide, where we're starting to realize how empty these relationships are with corporate brands. People are starting to get bored. People are starting to ignore. And in a very attention demanding space, which is the digital world, personal brands are more valuable. And this is where, I think that we need to put all of our resources, not to build moats at the business level or even at the technological level, but at the personal level, like where people choose products because they like the people behind them. Because technology is going to be incredibly commoditized. It doesn't matter if it's AI, if it's crypto, if it's like traditional web, it's all the same.
What do you think is the best way to stand out as a founder when it comes to personal brand?
I think it requires a lot of self-awareness, one of the things that I think I really like about your approach to podcasting, because it relates a little bit more to how I'm also thinking about from my own personal brand. Like there is definitely people who are more comfortable with being a little bit more high frequency and not necessarily low quality, but lower production. And I personally struggle to do that because I don't think I am as comfortable with like producing content just for the sake of producing content to keep myself in the loop. And I rather spend more time producing my content. And I've been trying to engage the WalletConnect community on a more frequent basis, but still trying to curate that content as much as possible and keeping it very high production. And I think that everyone who's building a personal brand, they have to identify who they are, what they are comfortable with, because a personal brand is not like a corporate brand. It's not something you can delegate. This is something that has to be almost part of your personality, part of your lifestyle, and you have to be comfortable doing it on a daily basis. So it has to be something that fits you. Yeah.
And again, in the beginning, we talked about nation-based identity. But for this personal brand, I would say like where you come from also impacts massively how comfortable you feel about all that, right? I would say, for example, Europeans, I'm Swiss. In Switzerland, people don't like to talk about themselves. They don't like to show off. They like to do, right? Not to show off. So for me, it was always like, I can never be a content creator and be there and talk to a camera and be like, the only way I can do it is indirectly through a podcast because I'll be talking to someone but because I'm not talking directly to people myself, right? The only way to build like a really good personal brand is having really amazing guests.
Yes.
Right? If you're from Portugal, right? I would say Europe is probably, then you have the American people. Usually they're the best type of guests because they're like dream selling, right?
Yeah.
It's another personality. We're the best, blah, blah, blah. And they really believe in it. And often it's true. Sometimes it's not, but at least you can really see how where you come from shapes that kind of things, right? And for personal brand, I think it's massively important. And it's so hard. And I've been kind of through that journey. You were starting to go through that too, right? Which is, how do I accept or not find it lame almost
Yeah.
as someone who is focused on trying to do good values, right? Like build value. And usually build value is through doing, not showing off,
Yeah.
right? You don't have time to show off if you're actually building, right? And so,
But it does impact one and the other, right? Because like so many times I would hear developers and they'll say like, oh, this is great. I love what you're doing with WalletConnect. I definitely would have done it differently. There's things I don't like about it, but really impressive with how you did in terms of like growth. And I would always say to them, I was like, well, at the end of the day, it really doesn't matter on the solution. It just matters if it's used. Because the first version that WalletConnect actually got adopted and really grew, right now, I honestly look back and I think how embarrassing it was designed, but it didn't really matter. Like too many times people get too self-judgmental about what they're actually producing and not focusing on the fact that like if no one knows, then literally you could have the best and it wouldn't matter. And you have to balance those, right?
or if no one cares because it's bad quality or product or personal brand, or if no one cares, therefore no one knows. So there's no reason to stress out.
Yeah.
They'll start to care when they know more, which means probably you're getting better at it, right? So instead of overthinking the personal brand or even just starting a company, it's like, even if I fail or it's shit, most people will not care.
Yeah.
For me, for this podcast, I was the first few months or even like first year, I was like thinking that in the beginning. And then I was thinking, actually, there's not going to be many views. So I have so much time to improve on everything, right?
Yeah.
That
It's
it's
a gift.
fine, actually.
It's a gift, actually.
Yeah.
Like you have this organic trial period. It's not a trial period that you set yourself. There is a trial period which is before product market fit. Before product market fit, you can make all the mistakes because trust me, after you hit product market fit, it's so much harder to make mistakes because now you have a larger audience. You actually have passionate people who care about your product and they will very passionately tell you when it doesn't work. So make all the mistakes now before you actually hit the product market fit. Experiment, really explore yourself, your products to really find what fits, because as a founder, this is a lifestyle and you cannot choose to have days off, unfortunately.
Wait until you launch the token.
Yeah, I have to say, launching a
To get
token
a lot of passion.
launching a token is like launching a product all over again. Like this is like the most startup moment I had since I actually started WalletConnect. Like because there was like this maturity that it kind of went into this huge momentum, right? When you hit product market fit, it's the market pulls you. It's not you deciding to push the market to actually do more and make more or build more. Like, no, they're demanding more. That's the cool thing about product market fit, but it's almost like driving itself and you're just keeping up with the market. The token, since we announced, it really feels like it's like launching a product all over again. It's really trying to find the product market fit. It's really trying to like grow the brand again. It's really like trying to grow the customer base again. And this is the most founder vibe I got since like 2017, 2018.
How do you feel about it?
It's a lot of hours. It's a lot of hours. Like, you know,
Wouldn't you miss kind of like the startup?
yeah, but
vibes?
now it's different,
pain.
right? Because on a personal level, like now that I have like a 16-month-old kid, it definitely is much harder to time manage with a kid, right? Because before, like you working at midnight didn't seem like much of a difference, but then once you actually have other things going in your life, you know, it's very different.
You're going to have some fun ahead. I can feel it. Alex Vanevik, again, understood pretty early that personal brand online would be very important, right? He actually understood a lot of things pretty early. This is one of them. I think he started to work on his personal brand in 2019, so that's like 5 years, especially in his Twitter, right? You both lived at the same time in Barcelona, both choose different approaches to personal brand. What did you guys do differently, and how much did it create different levels of opportunities, both on the personal level and on the business level for Nansen and WalletConnect?
Yeah, it's really interesting, right? Because I remember when I first met Alex, we went, we grabbed some drinks in Barcelona, and Nansen was like so new back then, right? And his personal brand was so new, and he was growing his personal brand super fast. And one of the things that I noticed that he was doing very differently than I was, I think it was two factors. One was the target audience. Like, no matter what your product was, you should always try to capture the mind share of the people. And when I say people, I was like, you should not limit yourself on the personal brand to thinking, oh, I'm a B2B business, so I only have to talk to other businesses. Oh, I'm building developer tooling, so I only need to talk to developers. Like, I think what Alex did really well to grow his personal brand is that he was talking to the people, to the general public. Like, it really didn't matter, because brand awareness would eventually drive more people to trust your brand, your corporate brand as well. And then it would lead you to actually have more adoption and more sales and more revenue and everything. So talking on a mindset that you're always talking to the general public definitely actually made him grow his personal brand really well. And it's something that I've only shifted very recently. I would say like only in the last 12 months. The token really changed my mindset on this, where you're not just talking to developers, which is what I mostly focused on for the first 6 years of WalletConnect. You're talking to the whole world, and you have to talk in a way that everyone can grasp. You can't be talking in technical lingo. You can't be talking in a way that it's like an inside joke for developers. You really have to talk in a way that everyone understands. And that's something that only started shifting for my personal brand. And that's something that Alex did early very well. And one thing that I also realized that he didn't do as much as I did was going to conferences. I built like WalletConnect in conferences. Like, I basically attended every conference since WalletConnect started. I basically flew every month and sometimes every 2 weeks to go to every conference. And I was building my network within like these more internal niche groups within the blockchain community, especially Ethereum. And because Alex was more focused on general public, conferences weren't a priority as much, right? They were important to build partnerships, but they were building on the shoulders of his large audience. So it almost was synergetic, right? That if you talk to the general public, if you focus on virtual versus in-person, then everything kind of follows. And I think that's something that it matters especially more in 2025. Like,
I think like last year, I also knew that, but I realized it with my own kind of experience, which was we were in Token 2049 in Dubai, and there was these floods, right? These crazy Dubai floods. And so it was like very chaotic. And at some point, it was taking so much time to go from one place to another that I was supposed to record like 8 podcasts with some pretty big people in the industry. And they would literally choose, because they have to make a choice. I cannot go to talk on this stage and come on this podcast, right? It was impossible for them. So most of them, actually all of them, they decided to skip some talks to come on the podcast.
Yeah.
And I was thinking, actually it makes sense, right? And the podcast was decent, but not huge yet. But like, because it's an online piece of content, quality, that's going to be there, that's going to be leveraged on. We're going to build multiple content. Whereas if you go and just talk, sometimes recorded, right, on stage, but you go and talk, you're talking to a few hundred people, a few thousand people, but that's it, right?
Yeah.
And so, online is eating offline for breakfast, for sure.
we also identified this like within the WalletConnect team, where we actually host our own conference. It's called WalletCon. And basically, the best outcome of that conference is not even the attendees. The attendees have an amazing experience because it's a very well curated group of people, about 1,000 people who are actually going to attend. They're going to network, they're going to meet, they're going to share ideas, and it's going to be a very high value for them. But for WalletConnect itself, the best value is the almost 1 million people watching the live stream. So we always cared to make sure that we have the highest production in terms of live stream, the highest production to make sure that people online can feel that they're truly present in WalletCon without actually going to WalletCon. And this is something we've done for WalletCon in 2023, in 2024, and we continue to do it in 2025. And we started to see how much people got involved and how much value was actually driving for us as well. Because if we actually had prioritized the in-person experience over the online one, then we have created a very high value for 1,000, maybe 1,500 people that were present that day. But we would have missed out on the 1 million people that were watching us online and participating online and actually, driving conversations online, So to ignore the online component on any event or any piece of content or even your personal brand, it would be a big mistake.
Do you think it's even possible today for a founder to not focus on his or her personal brand when you see that everything is going into this direction? We have like the rise of, X, since Elon came and is rewarding creators with actual dollars, right? We have Kaito, AI. They're basically trying to value attention with actual dollar amounts. So it's going even more than just mindshare, right? It's actually like trying to put some actual value on mindshare.
Well, founder-led marketing or team-led marketing, it really means that at the end of the day is personal branding, bringing value to the corporate branding. And yes, founder-led marketing has usually led to better results than team-led marketing, but that's not always been the case. Like there's been lots of projects that have succeeded building brands, not through the founder, but through key members in their team. Celestia is a good example of that, like Nick White. I bet more people know about Nick than they even know about the founders of Celestia, So it doesn't always have to be the founder. You can be an amazing inwards founder building a very strong team and letting someone else actually be the public face of the project. And this is something that it requires a lot of self-introspection as a founder, which is you have to pick. You have to pick, do you want to be the face of the project? Is this your best skill? Or do you want to sit down and work with your team and build the best product? And sometimes you can do both, and sometimes you have to choose. And if someone is not comfortable being the public face of the project, then they have to let someone else take that role. But if no one actually takes the role and all you have is a corporate brand talking on behalf of your product, in 2025, I would say that was a big, big mistake.
Also, it takes a lot of time to build these brands, right? These personal brands. So if you're starting now, it's never too late, but it's better to start yesterday than today, for sure. You're launching a token with WalletConnect, and this all comes with the theme of decentralization. We talked about Solana versus Ethereum before, right? You've been building WalletConnect for 7 years, and you told me that this changed completely your thought on how to approach decentralization. Why?
Even if I truly believe that I've grown as a founder in these 7 years. And honestly, if I haven't, I think the project would have suffered immensely from that. But it's something that you never stop learning. Like, I remember very vividly the first discussions around the decentralization, the token, like internally back in 2023. And there was still a lack of pragmatism. Like, we always proud ourselves as a team to be a very pragmatic team. But when you build something as mission critical as a token, you have to be incredibly pragmatic. Like the speed you need to execute, the scale that you need to execute, you really can't aim for perfection. Like you have to be very comfortable to execute all the time, every day, almost on an 80% confidence level. That means that you have to make decisions very fast and not have all the answers. And sometimes you have to take compromises. And, originally we actually had full intention to launch the WalletConnect chain with the WalletConnect token. And we still have like the mindset that it would be important in the future. And I think the community eventually will realize the same, that the WalletConnect chain would actually be very beneficial for the WalletConnect network. But currently, looking at everything that is going on right now with the project, the benefit of launching the token without the WalletConnect chain would be immense. And you really have to think of it from a cost-benefit ratio of what's the cost of launching your own chain, what's the cost of launching your token without the chain, and what's the ratio for the benefit. And sometimes you just have to move fast and you have to make decisions, and then you just have to make yourself as upgradable as possible, right?
One of the key topics when I talk to founders about centralization versus decentralization is, and you think the same, is if we decentralize too early, we kill completely product market fit, right?
Yeah.
Because we're not flexible enough.
Exactly. And I think the
Can you give
WalletConnect,
example in your journey
yeah,
of like being much more centralized enable us to find good product market fit? And then you said before, we need to kind of be upgradable, right? And you need to always have in the back of your mind this decentralization and be ready for the day that it's kind of like forced.
yeah.
So can you explain this PMF, right, found through centralization, and then give us maybe 2 examples of that forced you to decentralize?
Yeah. And let's go back to 2018 when WalletConnect started. My idea of decentralization was that we were not going to actually be a venture-backed project, and we're actually going to set up a foundation. And I actually went through the trouble of doing that. And now I laugh at it, how ridiculous it was, because I was setting up a foundation for a WalletConnect product that basically had 2 wallets, and it wasn't really justifiable in 2018 to have a foundation for 2 wallets. And at the time, it didn't even include MetaMask and Trust Wallet, which were massive, right? So putting decentralization first, it can hurt a lot. So you almost have to wait until the market demands it. And obviously that changed. And then in 2019, we stopped the whole foundation work. We started becoming more centralized. And then in 2020, it was like, WalletConnect was incredibly centralized. And then we actually did the venture funding. And then it was around like 2022. And then later in 2023 is when we felt it, that it was actually the partners that were asking us. Like they were like, we really like you, but we feel like you're a single point of failure. And it's not that we're going to drop out because we believe that this is a very important mission, but it does feel like WalletConnect as a centralized company has its own limits. Like, because at the end of the day, it can only grow as fast as the company can grow. And if you are truly decentralized, then everyone feels like they have ownership over the project, and everyone can contribute thinking, I am contributing to a public infrastructure, not to a company. And this is one of the big benefits of decentralization, but you can only meet that demand for decentralization if you have grown the network. And by the time we actually did this, we're talking about millions and millions of connections happening every month by millions of users. Like doing this in 2018 when the project was barely used is laughable today, because if you don't find product market fit first, why are you even decentralizing? And You just need to make yourself upgradable. That's something that we basically made the WalletConnect network as upgradable as possible, so we can decentralize slowly and slowly. And every time we feel the limit, then we decentralize.
It's a bit like, I mean, it's not the same, but when you start a business, obviously you need to make some money, right? But for me, I've been building businesses since I'm 23, and I started actually early on to think about tax structure, and maybe I should have like some other companies somewhere else to save on tax and blah, blah, blah. And it was complete nonsense because we're barely making any money, right?
Yeah.
So I don't know if it's like an ego thing or just, and at some point I was thinking like, the day you make more money and you have like some actual problems, or like it makes sense to have a company somewhere else to pay less taxes, or then you do that, right?
Yeah.
But not now. It's kind of like, I don't know if it's an ego problem or
No, it's honestly there's a term for this. It's called playing house. When you're playing house, it means that you're doing all the things that the book says that you're supposed to be doing, except focusing on the number one thing that you should be doing, which is like build something that people want. And we could actually apply the decentralization analogy to other examples. Like, we're going to talk about different businesses today. Like we talked about luxury fashion. Now we're going to talk about restaurants. Like restaurants, like you could argue that 2 restaurants make more money than 1 restaurant, and 1,000 restaurants make more money than 2 restaurants. But the scale and operations that you have to do from 1 to 2 and from 2 to 1,000 is very different. And in order for you to run 1,000 restaurants, you need to franchise. When do you actually decide to franchise? You obviously decide to franchise when you have more demand than you can actually meet as a company. So even if you're the best restaurant, let's say you're a burger place and everyone loves your burgers, then you open 2 restaurants, and you as a owner, you can manage 2 restaurants. Maybe you can manage 3 because you're really good at your job. But then you hit the limits, and then you have so much demand for your burgers that you cannot run these many restaurants. So you franchise, you decentralize, and you allow other people to own your burger restaurant. That's the same thing with WalletConnect. WalletConnect hadn't reached the scale where we actually had enough demand for us to actually have more node operators. And now we have 60 node operators because there is so much demand to suffice having these many node operators. But for 6 years, it was a single node operator, and only in the last 12 months, we actually onboarded other node operators. And that's why we now have a token.
the franchise example is good because I think many people who start like a restaurant or whatever business that could be franchised, they come and they'll say, I need to build this franchise, right?
Yeah.
Without actually saying, I need to build enough demand so that I actually have problems, that then I need to scale, that then I need other people to help me, and I'll go do that through a franchise.
Yeah. I mean, networks are businesses. Like, there are businesses. They should be treated like businesses, except with the big difference that networks are not wholly owned by a single entity.
Can you give me 1 or 2 examples? I think you mentioned, like the other day, you mentioned Ukraine war actually forcing you to think about decentralization.
Yeah, this one was a tough one. It happened actually in 2023. We already had all the plans for decentralization. We were already working on this. This was like an ongoing internal plan. So it's not like we actually made the decision to decentralize because of the Ukraine war, but it definitely caused us to really think that this is needed much sooner than we think. So not only there was like product market fit and there was actually demand for WalletConnect to be decentralized, but there was like this massive rush where essentially people had to like sanction certain jurisdictions, and then there was like ambiguity if it was like, wait, are we sanctioning Russia or is it sanctioning the occupied region of Russia? And then like, you know, WalletConnect had this very bad episode that only lasted 2 days, but it was quite quite the 2 days, where we actually ended up sanctioning both Ukraine and Russia. And then we had to like completely drop the connections and everything. And this was when I realized like, this is why decentralization exists. Like a single company should not be targeted like for sanctioning and like completely disrupting service because of some war that broke out. And this shouldn't be like the decision of like a single party. This should be a multi-party system where multiple people are involved. And this is very interesting because Ethereum also suffered sanctions, but then you actually saw a ratio between which nodes were sanctioning, which nodes weren't sanctioning regarding the OFAC sanctionings around Tornado Cash. And it was not the Ethereum Foundation's decision to sanction. It was each independent node operator making that decision. And this is one of the amazing benefits of the WalletConnect network, is this will no longer be the WalletConnect Foundation decision. This will be the decision of each independent node operator that obviously has its own risk factors and its own jurisdictions to comply to.
What's the future of WalletConnect?
So we talked about deep down, WalletConnect has been portrayed as a financial product for DeFi and NFTs and blockchain, but it is truly about identity. But while I do feel very passionate about decentralized identity, self-sovereign identity, digital identity, and even the concept of like removing national identity, I do not think that within the next 5 to 10 years, we're going to solve those problems. But there's one thing that WalletConnect can do very well, which is connecting wallets, as it says on the name. And the most impactful thing that we can do within the next 5 to 10 years is revolutionizing how we log in on the internet. Like the idea of a universal login has been fantasized by many. It has been taken over by Google, Facebook, Apple, but it has never actually been executed. And I truly believe that the way WalletConnect is progressing, how it's being decentralized, how it's being collaborated with so many partners. We're talking about 50,000 applications, 600 wallets, all working together to this mission. We can actually succeed at building the universal login for the internet.
Talking about decentralization and the future of WalletConnect, you told me we have our values and our views, and whoever has the same should work with us. And this is when we were talking about Ethereum approach that is not pushing for anything, basically, right? And not choosing. The problem of the people who argue for decentralization say we should never pick winners, right?
Yeah.
But you don't actually agree with that. You can indirectly pick winners by giving a direction, and you think that's what you're doing at WalletConnect, right? And you think that's what Ethereum should do also moving forward. They should have this decentralized network, but kind of centralized leadership that is making decisions on the direction and therefore will indirectly pick winners.
Yeah. And this was actually something that we thought many times over and over again about when does WalletConnect make a decision that it's prioritizing one wallet over the other? And we've been blamed of this multiple times. And honestly, I don't think there is literally anything to sustain these claims because we never actually picked favoritism over wallets. What we probably failed at the beginning to do was for creating transparency over the criteria through which we believe a good wallet is built around. And this is something that we only started working on within the last 12 months, and it's called the WalletConnect Certified. So we basically created a certified program that defines the criteria through which wallets are certified as high-quality wallets. This does not mean that non-certified wallets cannot use the network. They 100% can continue to use the network without any disruption, but certified wallets have a better experience. And then that also will influence the tokenomics that we also have in place. And this is described in the white paper. Certified essentially means that as a network, we're making decisions of what we believe are good user experience patterns that we favorite. So we're not favoriting wallets. We're favoriting certain guidelines and criteria that some wallets have actually followed prior. And what this then creates is more coordination, because then if one wallet decides to do something good, we can then define that as a good criteria for WalletConnect certified, and then other wallets follow with essentially the stamp of approval of the WalletConnect network. So I think that too many times, like these decentralized networks, Ethereum included, they tend to be scared of the idea of picking favorites, but they could essentially pick certain patterns or approaches or design decisions that indirectly pick favorites. And interoperability, bridging, settlement, data availability, all of these things that blockchain focus on, some are doing better than others, and they definitely should be opinionated about the approach, not the actual project, but the approach, and indirectly picking favoritism over the projects that followed that approach.
Absolutely. Otherwise, you end up in no man's land with no one making any decision. And absolutely. What's something you believe in that most people would not agree with?
That you should build standards in parallel with products. And I get into this argument a lot. And it doesn't mean that I'm right. It's definitely a very tedious way of working, right? Because essentially what I'm saying is you should build your product thinking that other people will build the product in the same way. Therefore, you should make product decisions such that you do not vendor lock your users. And that's something obviously contradictory to building products, because one of the biggest advantages of owning a product is creating moats. And many would disagree with me, saying that building standards ahead is detrimental to product market fit. It does not actually help actually validating different approaches. But if there's one thing that we have seen validated over and over in time, is that people who do not build with openness in mind, this idea of standards interoperability, end up building moats, sometimes intentionally or unintentionally, and they are very hard to revert. And once you actually have that moats, then you have to make sure that your shareholders or your token holders are happy. And once you have the moat, it's very hard to remove it. And building in a moat-free environment is better for the ecosystem, but it might hurt your short-term gain. And that's sometimes that it's hard to let go.
How do you shift founders' mindset towards a longer-term approach when we are in a space that is so short-termist, right? Value extractive. Obviously, like I'm talking to a lot of people who are on this podcast who are the real ones, like you, think long-term, but you guys are a minority. How do we get more people to think? It's almost like, I would say, the founder almost either grew up with the right values from family or context, right? Or made it already. And they made so much money, they're like, okay, now I can kind of focus on doing the right things for the space because I don't need to think about myself first anymore. What's the solution?
I think in my case is I was lucky to have onboarded into crypto through the open source. Like I was very much ingrained in the open source community. So when I grew into the WalletConnect community and the crypto community with WalletConnect, it was pretty much open source. And the open source philosophy has always been to build together. And the reason for that is because open source software is usually built by people who work in companies like Google, Facebook, like different companies in the world. And they don't actually have the time to actually build these side projects. So building in open source is actually very beneficial to them because they have a day job, and the open source software can be contributed by other people who also have day jobs, and they can work on weekends in building this open source. So they actually see this as an advantage to working together because we all put in a little bit of time. And I think that if people who even have VCs and, you know, shareholders and token holders who are looking up to them and saying, you need to capture value. You need to really evaluate if you are even in the position to do that yourself. Like, if you're telling your investors that you are going to capture like 1 billion users, do you really believe that going through a seed round, Series A, B, C, D, go through all the letters on the alphabet, can you actually capture 1 billion users by yourself? Because through closed source and through not building through standards, you're basically telling yourself that you will independently capture 1 billion users. You have the capacity to do that, and you will have all the resources available to actually capture 1 billion users. And that's a big ask for a founder, you know? I think that if you ask yourself, can I actually capture 1 billion users? You might want help. You might realize that you actually want people to work with you so that we actually grow together to reach 1 billion users, rather than try to keep your 100K users all to yourself and actually reaching maybe 1 million users and just call yourself, this is good enough.
What's your biggest prediction for the next 12 months?
I think that we will see stable coins completely dominate commerce. Like, it's actually happening much faster than we ever predicted. And while all of these experiments around DeFi, DAOs, NFTs, and social finance are super interesting, the one thing that is starting to ingrain into people's mind is that stable coins are actually money, and they're so efficient. They're so efficient. They're crazy efficient. Like, it's so efficient that companies like Robinhood, they've publicly said that they have started settling internally all accounting through stablecoins, which is mind-boggling. It's so efficient that Stripe has now included within their SDKs to accept crypto payments through stablecoins. It's so efficient that we might realize that people will start holding USDC because it's better than having Visa or PayPal or any other form of digital money. And before we know it, stable coins are in your favorite online shop, in Amazon, everywhere.
I mean, this podcast is run on stablecoins. Like, literally. Every time there's a payment, I'm like, USDC, please, done. I was thinking the other day, I was like, this is incredible because I have a normal business in the normal world, data analytics company since 9 years. Payments, always late. It's horrible. Crypto, I'm like, upfront, stable coins, boom. Like, you do a deal.
Yeah.
Like, 2 minutes later, you have the stable coins
Yes.
in your freaking wallet. It's insane.
Yes.
Like, literally. Like, there is one or two sponsors who say, we want, and there's one who says, we want to pay with US dollars. And I'm like, oh, fuck, it's going to be a nightmare.
Right.
I'm having now issues to get the US dollar in a bank account in Hong Kong and then to take it out because I want to convert it into stable coins.
Exactly.
Just taking out bank. What are you doing? What is this money go? I'm like, fuck, man. Like, stablecoin USDC, done. Like, it's insane.
And I think I only started realizing it, like, I've been in crypto for so long, and I got exposed to stablecoins as early as like when MakerDAO created DAI, and that was like a major revolution for DeFi. But it was only like in 2021 when we actually did our first venture fundraise that I was getting anxiety from all of the people that chose to actually wire me money versus the ones who actually were just sending like USDC or USDT directly. And that's the first moment I realized my actual user experience doing a fundraise is improved by those who actually picked USDC and USDT. And then I actually remember in the following fundraise, I actually created a rule that if you're not sending at least 100K, then you're not even allowed to do wire transfers, because I only allow wire transfers for large amounts, because having all of those small checks coming in through bank transfer was a nightmare. And having all of the smaller checks coming through USDC or USDT was just beautiful. It just made the whole fundraise more efficient, less stress-free, and it just imagine what an online shop would feel.
Absolutely. So the podcast gets paid in USDC. We are a team of 6. Only one person I pay in US dollar because they absolutely want to. All the rest I kind of like push and force. I'm like, even people, they're not like necessarily crypto natives, right?
Yeah.
But I'm like, give me a USDC address, boom, done. Or USDT address, boom, done. And I'm like, do you want to get paid earlier? Or do you want to be paid way too late because I'm having problem with the Mac?
Yeah.
But like, okay, they find their way to the ERC20 or the Solana, whatever address they need to get their USDC.
And this might be the beginning of the shift through true digital identity, driven by stablecoins.
I think these are beautiful words to end this amazing conversation. Thank you so much, Pedro, for doing this, for spending your days and night trying to enable a more open world where people can move freely and create the impact that they truly deserve in life, regardless of where they're from, where they grew up. I think this can only be more beneficial for everyone. And it's a massive challenge to tackle. So thank you so much.
Thank you for having me, and thanks for the coffee.
Awesome. Pleasure.